So is there so much brand damage to Tesla that vehicle sales are going to fall off a cliff? The latest news seems to say otherwise. First, Tesla's plant manager from Giga Berlin is saying that production is ramping up and cars are going to market quickly. Second, credit card data is showing order flow has not degraded. Third, all new legacy Model Ys appear to be sold out in at least 25 states. Fourth, any tariff war should not affect Tesla in a major way, with 92% of Tesla's Giga Berlin supply chain now located in Europe, and all Tesla vehicles are in the most American-made cars list. We got Jeff Lutz here with us. He's the ex-CVP of Supply Chain and Chief Quality Officer. He's now CEO of his own supply chain consulting firm. Quick thoughts here, Jeff, of what's actually happening for Tesla investors right now?
Yeah, I think the word of the day is going to be noise. And over the next 10 days, you're going to see all kinds of noise, I think, from all sides. And I think what it's going to be incumbent upon investors, and what we're going to chop up here in a minute, is just how to separate some of the signal from the noise, just based on all publicly available information. We'll break it down, we'll analyze it, and then we'll figure out what next steps are. But I do think it's going to be noisy, but we're going to be informed about it throughout the whole way. So let's get through it.
Yeah, I appreciate you being here today, Jeff. I know that this is something that's concerning a lot of investors right now, right? Is there tremendous brand damage? Are we expecting that volume of sales is going to plummet? What's causing the reason why, if we did see some reduction? So we'll take a look at each of the gigafactories and your analysis of what's actually happening. So this is a great show for you to be here. People need to hear from you. So first of all, there is brand crisis. That is something nobody is debating. And the question is, what should Tesla do about it? And what should Elon do about it? So at least he did come out, just for everyone to understand. He did make a post and he said this: just wanted to say thank you to everyone supporting Tesla in the face of relentless attacks. I'm super, super appreciated. He had an all-staff meeting on Friday and he came out and said this as well. And here's maybe a little tiny bit of a clue here, but we'll take a look at actual facts that have come out in the last few days as well. But this Mario posted this saying Tesla service centers are struggling to keep up with surging demand. Reports out of Schaumburg confirm what many Tesla owners are seeing firsthand. Service centers are slammed. According to a Tesla employee on the ground, demand is so high, they're barely keeping up. Elon actually reposted this post. Is that any kind of hint there, Jeff?
Yeah, there's multiple of these, by the way. It's not just one, and we're seeing it in multiple geographies as well. And what's happening is inventory is returning, and there's also there's peak interest in the brand. It's one of these things of there's no such thing as bad media. There's a lot of interest in the brand, and there's been kind of a dormant part of the world, which conservative people that were completely against buying EVs. And not only are they seeing that some of the most prominent influencers, both independent, I would say, like Joe Rogan, and conservatives, they're talking about it. But I think this is noise kind of from both sides. I think you're going to get puts and takes from both sides. You're going to see it. There's a video this morning of some woman selling her, taking a $24,000, loss and underwater, selling her Tesla to get a Rivian to own whomever. Anyway, the Tesla was bought. That's already done. You've already helped Tesla. You already bought it. And now somebody else is going to go buy that Tesla. By the way, used car inventory is declining rapidly across all brands. So there's a big movement right now in new car inventory. I think it's below 40 days now in the United States. So anyway, just keep that in the back of your mind. But anyway, there's going to be tremendous noise from both sides. It's incorrect to say, like people say, there's no damage at all. Of course, it's some number greater than zero. And it's also incorrect to say that there's not more, incremental or new buyers coming in that have been awakened. That number is going to be some number greater than zero. But we're going to talk a little bit more about here is what you can't overcome are the physics of moving product, raw material into factories, ramping down an old product, ramping inventories down, ramping up a new product. And we'll talk through the physics of of what that could do to the quarter and why that will prevent and create some noise. But just the word of the day is noise. And we're going to see some data that shows that some of these things are like, oh, January declining sales, oh, February this. You're going to see why there's noise in the system and what we could potentially see coming in the future. And honestly, we're going to have to wait on some of this to hear from Tesla, because the one thing no pundit on the outside knows, except Tesla and except Elon and a very few hand-selected members of the leadership team, is the global order inflow rate. And that daily number is what drives a lot of the near-term things and near-term promotional activity or not having promotional activity, how inventory is moved throughout the world, and how production plans are changed throughout the world. Tesla has a near zero latency system to understand what's going on with demand. And if you look at who they compete against, they're competing against people with a dealer network who that is not a zero latency system. Those other people besides Tesla that sell cars sell into these dealer networks, and that creates a huge amount of inventory and data latency to know if are you building up inventory, are you reducing inventory, do you have a sales problem, do you have a brand problem or not. It takes them much longer to know that. Tesla will know things very, very quickly and be able to respond very rapidly promotionally.
That's a good reminder, actually. So that's why when you see Elon reposting that post saying that we're not seeing demand issues, maybe there's something to that. Maybe there is, because he was one of the few people that has so much data. He would know if there's brand damage. He would know if there's volume that is more than just the transition issue with the Model Y. What I like about what you did, and we'll show folks here shortly here, you actually quantified that. One thing we can kind of look very closely on is the Model Y transition. That is a fact that happened this quarter, and you can kind of piece things together and estimate that. The rest of it, noise. It's probably happening, but we need to figure it out. Now, I think one of the biggest, common theme right there is Europe. It's Tesla sales is just completely plummeted off. Nobody wants to buy Teslas in Europe anymore. His associated with the government, and people in Europe are very upset with that, and they say, I'll never buy Teslas anymore. Well, is it true? So let's take a look at some data directly from the Giga Berlin plant manager. Alex Voigt is one of the Tesla influencers who's in Germany, and he reported that Tesla has increased its market share in Europe in March heavily compared to January and February because production is ramping up. So that's a good sign. Maybe in March they had started to catch up. Maybe there's some sort of, yes, January, February fell because they stopped producing cars, but it's gone up. Giga Berlin plant manager Thierig said, we are currently continuing to ramp up production. Our delivery centers here are here and at the airport site in Nordenberg are relatively empty. So the cars are going to market quickly. We're well on the way to ramping up production again to 5,000 vehicles per week. We already reached this level last year. We want to at least get there again. We have the opportunity to grow further at the site. So it sounded like things are going really well there. He shared this data point here. What are we looking at here? January, February, and March. You look at light blue is Tesla, and it did fall in January, February, but it popped back up in March. So it's sounding like if there was any kind of transition issues, they've kind of catching up now.
Yeah, and and that's it's 5 countries reporting in Europe, and the light blue bars Tesla. In what we talked about again is entering January with 12 days of inventory means you're stocked out in a lot of locations. So there will be pockets of inventory. Somebody from Europe DM me and say, hey, look, here's my zip code, and there's Model Ys here. I'm like, well, it's great in that zip code, but now look at this zip code. And they're like, oh, so you're going to have these, when you're at stock out, there's a definition of stock out that's defined relative to your order inflow rate and your level of inventory. And basically what you want to do is you want to keep an amount of inventory that keeps your product available. So when somebody goes in, there's data that shows that basically within about a 4-day process, people want to complete a car purchase. Of course, they will order cars. That's the Tesla model, the build order, but you need to also have inventory of product as well for purchase. And just what all this data shows is if you enter with stock out levels, you're not going to sell a lot of cars. And then you say, okay, well, great. We're going to just restart rebuilding. Well, if the product you're starting to build is a brand new product, you're going to start at a lower rate. The new Model Y, there's a lot of similarities. They did a really nice job with the update, but people think that like it's just the front and it's just the back and it's just some of the stuff in the interior, and they name off 5 things and they think that's all that's changed in the new Model Y. In reality, about 70% of the material changed over. That's a lot. Okay. It's great that they were able to reuse, 30 some percent of the prior bill of material. That's great. But when you change over that amount of the bill of material, what you're re-ramping is you're re-ramping your supply base, and then you have to re-ramp and retrain all of the manufacturing operations in the Giga site. So that's new fixturing, it's some new tooling. It's the same lines. People get confused with tooling, they get confused with CapEx. It can be the same manufacturing lines. It could be the same large general robotics format minus the parts that have been deleted or combined. But then you have to retrain you have to build new nests for the fixtures. Those all have to be qualified. The operators have to be qualified on the new process steps. So that's a period of time. So that's when we get into, okay, what did the Model Y do? And we'll talk in terms of what that knocked out of production in the quarter. And we'll talk more about that. But this is a more signal coming out of Germany, out of these first 5 countries, which is as the new Model Y returned to supply, so did it return to being the number 1 seller, and so did Tesla return, that light blue bar growing. And there's some people I saw responding like, well, you can combine Volkswagen and Skoda. That's fine. The point is you can do whatever you want with the graph. The point is the light blue piece of it is continuing to grow as Model Ys return into inventory.
Yeah. Right, exactly. So if that's true, and you got confirmation from Giga Berlin plant manager that their production is going up, number 1, and on the other side, market share is going up, which means people are buying what they're selling. Then that means that there is some brand damage, but it doesn't. It seems to be not this death knell thing. And Jeff, you've been saying this in the last month or two to expect this, and you had this post out. Hate to sound like a broken record, but as predicted, Tesla share should be back on the rise as supply return. You pointed that out. Now, the question to ask the Berlin manager is there anti-Musk criticism? What do they think about the politics that's happening in the U.S.? He didn't really answer it as you expected, kind of very politically. He actually had a politically correct answer to the political question. And he just said, we focus on what we do best, right? So again, he's the head of manufacturing for the facility. He was asked the question, how do you feel about what's happening with the U.S.? Andre Thierig, he said, Tesla isn't concerned about the recent political climate surrounding Musk and Trump. We focus basically on hyper-focus on making great vehicles. He said this: we as a company, and even more so as a factory location, have never positioned ourselves politically. We focus on what we do best, namely to build cars. Very good and very many. For us, this is about production at the site, not in politics. Yeah, so you did a good job staying out of it. All right, so let's get to some real data here. Jeff, you liked this Gary Black post. He said that he has access to the order flow. And you've been saying for a while, really, it's the order flow that we need to find information on, right? It's like everything. This is one signal, is the orders being requested of Tesla. Well,
he does not have, to be clear, he does not have access to order flow, but
no, but he does not have access. Yeah, no, I know. He doesn't have access to Tesla, but what he does is, proxy third-party credit card data, right? Like it's, how to trust these trusts or not, sourced from Bloomberg. Well, according to the credit card data, shows that daily year-over-year orders through March 4th have not changed much from a quarter earlier, and weekly orders through are actually higher. So if you look at credit card data, it doesn't sound like there's a plummet in orders of Teslas. It's true, because while true that consumers pay cash to take delivery new Tesla, credit cards are commonly used for the down payments. Okay. Also, he looked at Model 3 shipments, right? If there's because the Model Y is the one going to transfer, you should see a drop off in Model 3 if there was brand damage. If brand damage was severe, as mainstream media implies, wouldn't the Model 3 delivery show deterioration? Our thesis remains that the drop off in Tesla 1Q is due to Model Y inventories, which is what you've been saying. And then finally, you looked at China insured registrations. It's actually, even despite the transition to the new Model Y, it's actually only 4% underneath the first quarter of last year. They've seemed to have caught up quite quickly, and I think most people don't expect that there's brand damage in China. So you basically said this. You estimate that you think that Tesla will be supply limited this quarter. Supply limited, not demand limited, supply limited, with 3, 4, or 5 weeks of Model Y production downtime. So you calculated it, which is great. You quantified it to be about 100,000 of potential supply lost. So expect Q1, when that reports next week, expect it to be maybe about 100,000 less. But does that mean that it's brand damage? Tell us what you wrote here.
Yeah, it's just honestly, it's January 29th. I think Tesla had their Q4 earnings, and the CFO made an official statement on the call. It set it up of we've not seen anybody change over, the highest volume selling car model in the world, but we're doing it. And there's going to be several weeks of downtime. And this is where I had a little bit of a beef with some of the analyst community, just not jumping on that, number one, and asking the question on the call. And number two, not coming out the next day and adjusting the Q1 estimates down. As soon as they say, in my brain and how supply planners think, is when I hear several weeks and I hear Model Y, I go to the roughly 29K a week production rate it was running at in the prior quarters globally, and I multiply that by 3, 4, or 5, and you pick a set of numbers in between that. You say that's roughly a range of what you could have in supply loss. And if Tesla was running a production operation, remember, there's a difference between capacity. There's a difference between capacity, utilized capacity, and production. But if Tesla was doing in the area of 420 to 460,000 units of production, and you want to go in and take 90 to 120,000 units off of that, you just do the math. All you do, you just do the math on that number, and you get to, this is where you go to data over emotions, and it's pure math. Just take that number, that production rate, the 420 to 440 or 460K production, and net off those Model Y units. They're not coming back in the quarter. Now, what could eat into some of that shortfall? What could eat into some of that shortfall is, okay, they came into the quarter with some inventory. Remember, I told you they came in with stock out levels of inventory. So if they came in with 12 days of inventory, and if you look at their production and sales volume in the last quarter, that could be around 65 to 75,000 cars. So if Tesla decided to bleed that down further and to take that down 30,000 units, maybe that injected another 30,000 into the system, where it would feed sales, but obviously it would not feed production, and that could eat into some of that shortfall. But that's a small number of what they could possibly do. So the other thing in the second paragraph I reference is this is why it's going to get really, really noisy. Remember, I told you they started the quarter with very low inventory. It caused a drawdown in sales. By the way, for the people out there that are just saying it's all brand, it's when you present a data, first off, anybody that's in supply chain would look at their inventories levels, would say this is the highest order bit. Their inventory levels coming out of Q4, that's the highest order bit in terms of what would impact January sales. Any professional will look at that and come to that conclusion. But now when you inject emotion into the conversation, they'll make it everything. And as soon as you say, well, in January, well, how did the UK, how are their sales 20% higher than the prior year as January or February. Well, then everybody just shuts up. Or if you look at, they looked at U.S. registrations in January and they were down 11% for Tesla, but they were down 22% for Rivian. And when you ask that question of like, well, does Rivian have a brand? Everybody just is quiet. This is why you have to go back to being data driven, and nothing is going to trump the physics of inventory levels, supply, what the CFO says on the call. Just be calm, look at the data, understand what's happening, understand what you own. By the way, understand that this is the 90-day hamster wheel of the quarter. Nobody's making excuses. What we're describing is what is actually happening right now based on all publicly available information. But the second paragraph of that post, Herbert, if you're able to put it back up, I want to alert people to the phenomena, because this happened in Q1 as well. If this new Model Y ramp is going well, they're not going to stop it. So Tesla said they got out of the delivery wave business, a year and a half or 2 years ago, which means that they want to just keep everything going. They're not trying to do expedite logistics in the last 2 weeks. They're not trying to create all this cost. They're not trying to drag all the inventory down. But obviously you saw them drag the inventory down in Q4 ahead of the new Model Y introduction. And I think that's also to really be on the positive side of free cash flow. So Tesla is putting inventory ahead of sales, because if you saw in Q4, I think they did 495K and the number was supposed to be over 500K or 515. Tesla could have easily just bled down inventory and did that, but they didn't. Sorry, they could have easily produced more units and didn't. They decided to bleed down inventory.
Yes.
Correct. So now if this Model Y ramp is going well, what you're going to have is you're going to have stranded inventory. So what you're going to have is you're going to have in Berlin, it's going to be, instead of like slowing production down, pushing everything out to the airports, pushing everything out to the local delivery centers and driving those final sales contracts to get the inventory off the books, they're just going to keep cranking because they got to get Berlin up to that, if it's 5K a week or more number on the Model Y. So they're just going to keep going. So what's going to happen is you're going to have Model Y, you're going to see the inventory number growing because they normally chop it off to drive it, for end of quarter sales. They'll slow production a little bit, but now they're not. So what you're going to see is you're going to see Model Y inventory start to rise on that last week or so of March. And you're going to see it enter April with rising inventory. And then people are going to be like, oh my God, now people don't want to buy the new Model Y. Yeah. That's why I'm saying it's going to be, and this happened in Q1 of last year. We sat on the show, we talked about it. I said it's going to happen with the Model 3 because they were behind, and it's going to happen with the Red Sea Berlin attack and the Berlin power attack. They were behind in production, so they're just going to keep going, and then they're going to flush all that in Q2, and Q2 ended up being ahead of plan. We talk about this a lot. We repeat it because it's worth repeating. Yeah. And that phenomenon, what's going to happen at the end of the quarter, you're going to see that. And now all the crowdsourced inventory charts are going to come out. They're all going to hit on X. You're all going to see, oh my God, Tesla inventory is building. Nobody wants the cars. This is the phenomena of a new product being introduced in a quarter and them not slowing down ramp of that to hit a quarter end number.
Jeff, you're the best person to explain all this. This is fantastic. Okay. So you quantified it, right? We should expect about 100,000 cars less in Q1 because they had to shut down the production line by several weeks. Having said that, you pointed out that they are selling some of the old legacy Model Ys. That's going to maybe come up. They started creating new inventory for the new Model Ys in third quarter. So that some of that might be there. And then the inventory might go up because they're actually producing and increasing their production levels across the plants, and then people can just jump on that. So that's a good way to quantify it. The other thing that people are now focused on is the legacy, the old Model Y. They actually continue to build that as the quarter went because they were still trying to sell that while we're waiting for the new Model Y. And the latest data actually is showing that Model Y, so they created two cars, right? The old legacy Model Y and the new Model Y. And the old legacy Model Y, that inventory, which is in inventory, is completely sold out now on 20 something states, 23 states, I think I counted. I can't remember. It's sold out. So this inventory was of the new legacy Model Ys, which is why the photo above was used. The refresh Model Y is not yet available in inventory. They continued the production of the legacy Model Y well into Q1 to have enough inventory while they started production of the new refresh Model Y. So that's a good sign that all of this is sold out now, which means that, again, another potential signal here that is there brand damage? Yes. How is it severe? Maybe not as big as people are making it out to be.
Oh, money. I mean, money talks. Like in Illinois, for example, if you can get the $7,500 federal credit, which is still live, and Tesla is discounting these cars, $5,000 to $8,000, and Illinois has a $4,000 rebate, they'll send you a check after you purchased your EV. They'll send you a check within a couple of weeks or a couple of months. I mean, that's gonna supersede any noise. People are gonna walk through a picket line or do whatever. They're gonna go get the number one selling car in the world at a great value. And if you get a 2025 legacy body style Model Y, you're getting the latest of everything, minus this new introduction that's coming out. I would say I am a bit concerned, or at least I'm questioning, why isn't the new Model Y available to order in the US? And there's noise in the system on that too, because people go in because all they have is the launch edition. What I'm referring to are the long range standard edition, which is now available for sale in other geographies. So I have a bit of a question of, was there just so much demand for the launch edition that they had more of those to build? If that's the answer, well then fine. And because of all those, if you can stack all those rebates and all those reductions, the launch edition with FSD is it's actually very good. So I just don't know the answer to that. I think that's one question in the back of my mind. Or are they having a supply issue starting up on the new Model Y? So it would be interesting to understand. Again, we don't have any inside information. It's all public information. Why can't I go to the website and order a new Model Y that's not the launch edition? And so that would be an interesting question to ask and answer. But yeah, the inventory burning off, this is what great companies do, which is you have channel inventory, you're doing a product transition, you want to get rid of that channel inventory, you want to get the whole pipeline primed for the next product introduction.
Yeah, and the other, so as you're creating a new car in that particular geography in the US we're talking about at this point, then you need the supply chain, and you want it to be American made, because the concern right now is potential tariff wars. And is Tesla going to be affected? You've already answered this question several shows already, where yes, it's going to be affected, but not as much as many of the others. We've compared data. We got new data here to show that in Germany, for example, 92% of Teslas built in Tesla Giga Berlin, the supply chain is now located on European continent. So it means Tesla's European operations will be mostly unharmed of any transatlantic trade conflicts. This is from Jan of the EV Universe. And according to Andre Thierig, the plant manager of Giga Berlin, he was interviewed. This is what he said. He said that, right? We have further increased the level of localization of our suppliers with the transition to this new production. 92% are now located in Europe. This makes us even more resilient to disruptions in global trade. We also have a high level of vertical integration at our site, which has already paid off in recent years. So neither the turbulence in supply chains during the coronavirus pandemic, nor the chip crisis, nor the war in Ukraine have led to any production disruptions. Yeah. And then an independent American University School of Business, they confirmed that Tesla is the number one most American-made cars. You can see here that Tesla Model 3 performance is 87.5% made in the US, include all the parts, tied with the Model Y long range, tied with the Model Y, these guys are 85%. And then Cybertruck is 82%, Model S, X, these are all 1, 2, 3, 4. And then you got the Ford Mustang GT at 80%. And you've got Honda Passport and so forth. Yeah.
Yeah. What's happening here is, this is very important for the listeners to understand. This localization scheme is a 5 to 7 year CEO down, or chief supply chain officer, but in this case it's CEO directive. And these are the decisions. This is the strategy. This is the foresight. This is the vision that will separate companies between, good, better, and best, or the greatest out there. It's these kind of decisions that will do that. You had to have tremendous vision and foresight, because you could have globalized your supply. Here's a playbook that was out there. This is a playbook that was out there 18 months ago, which is go out there, create a globalized supply chain, even create a lot of parts in China, for example, and then have those Chinese suppliers create globalized centers of excellence all over the world and source from them. And what people are finding is that, under this new regime of tariffs, and if you look at how the U.S. is tariffed versus how the U.S. tariffs other countries, you will find that if you look at just both tariff barriers and non-tariff barriers, the U.S. is at a significant disadvantage globally, meaning others have more trade restrictions on the U.S. than the U.S. puts on others. But just take that out of the equation, regardless of the U.S. or not. In the EU, for example, that 92% localization, the EU not only has inbound tariffs, they have duties, and they have a VAT on localization, where and these are the additional taxes that people don't talk about. They just try to look at tariff for tariff. But in the EU, they have this VAT, which is basically, and the VATs are all structured differently by country, and I'm not going to get super wonky. But what the VAT does in most cases is they're driving for localization of inbound supply. Meaning, if you build it's not only you have to do final assembly in the continent or in the particular country, but if the inbound supply is inside of that economic boundary, in this case the EU, they will relieve the VAT, the value-added tax that's placed on the components. They will relieve it at the end once the product goes for sale, if the components are originated inside of the economic boundary. So not only do they have an inbound tariff and duties from outside the country, but they also have it on the inbound components. They'll have a tariff and they'll have a value-added tax on that. So this localization scheme is the decision that Elon and his leadership team made 5 to 7 years ago, and it's going to prove to be very, very valuable. And it's fundamentally sound from a supply chain design perspective, which is what, this is my background. It's fundamentally designed in lower network latency. This allows them to carry lower inventory. This is the other thing. If the span of your supply chain, both inbound and outbound, if you can shrink that in terms of the number of days, and you can shrink the amount of product that's in that inventory channel, you shrink the dollar value, that generates free cash flow. You can also pay your suppliers faster, that network latency. All these things are actually connected. And I'm telling you, this is 5 to 7 year type vision that you have to put on your company. And Tesla's in a really good position here.
Very good position. It's almost like as if Elon planned it ahead of time. Like you said, 5 to 7 years ago, let's reduce any risk. And we need to have, the most American-made car, the most Chinese-made Teslas, the most European-made Teslas. Okay. So even Tesla themselves posted and said, by the way, Teslas are the most American-made cars, right? So we've got that.
Yep.
Okay. So we're going to just, one final topic here is there's a lot of brand crisis that's going on right now. There's a huge movement of people, Tesla takedown. There's a big event happening in March 28th. This is happening. And so then the question is, who's funding it? And could it be Tesla shorts? We'll cover that right now. And I mean, again, this show, neither you and I are predicting what's going to happen to the stock. We don't know. It could fall. We're just trying to share stats and trying to clarify what is, when you see volumes go down, or what could have made it up or not. And I think the audience here learned a lot from you today, Jeff. So thank you for that. This was a very important show today. We're headed into production delivery that's going to be reported shortly. There's going to be a lot of noise. Everybody's going to jump on it. They're going to say that this is because of brand crisis. Nobody wants Teslas anymore. But viewers of this show hopefully have learned a few things from you, saying, okay, let's break it down. Here's the info. You shared a lot of info. Thank you very much, Jeff. Follow him on his X account at the Jeff Lutz. Thanks, everybody. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.